Welcome to this week's Sector Review, where we'll dive deep into the market moves from September 22nd to September 26, 2025. Buckle up as we unpack the seismic shifts in sector capitalizations and decode the candlestick formations that are shaping the trading landscape. So, let's jump right in and unlock the secrets behind this week's market momentum. The technology sector led the charge this week with an impressive gain of 8.2%. Translating to a staggering market capitalization change of $62 billion. Software and IT services were the standout performers, each posting increases of around 8.5%. Hardware and storage weren't far behind, clocking in a weekly return of 7.3%. The sector formed a bullish continuation candlestick pattern on the daily chart, signaling that the current uptrend is likely to persist. This pattern is characterized by a long green candle that closes near its high, indicating strong buying pressure throughout the trading session. It suggests that buyers are firmly in control and are pushing prices higher with conviction. The technology sector has been riding a wave of strong momentum for some time now, and this latest development points to the potential for new highs in the near future. Communication services followed closely behind, with a robust weekly gain of 7.8% and a market capitalization increase of $53 billion. The sector was buoyed by Alphabet's stellar performance. As the tech giant surpassed the $3 trillion market cap milestone, a Morningstar pattern emerged on the 4-hour chart, indicating a potential trend reversal from bearish to bullish. This three-candle pattern consists of a long bearish candle, followed by a small-bodied candle, and completed by a strong bullish candle that closes above the midpoint of the first candle. It's a powerful signal that the bulls have regained control and could drive prices higher in the coming sessions. The consumer cyclical sector also saw significant gains, propelled by Tesla's remarkable performance following major insider purchases. The sector posted a 6.5% increase, equating to a market capitalization change of $45 billion. A bullish engulfing pattern formed on the daily chart, suggesting a potential trend reversal. This pattern occurs when a small bearish candle is completely engulfed by a larger bullish candle the following day, indicating that buying pressure has overwhelmed selling pressure. It's a strong sign that the upward momentum could continue in the short term. Financial services benefited from the Federal Reserve's 25 basis point rate cut. Small and mid-cap stocks in this sector saw particularly strong gains. A bullish hammer candlestick pattern appeared on the 4-hour chart, hinting at a potential trend reversal. This pattern is characterized by a small body at the top of the candle with a long lower wick, suggesting that sellers pushed the price down during the session, but strong buying pressure brought it back up by the close. It's often seen as a sign that the bulls are starting to gain control. The industrial sector rode the wave of infrastructure optimism, posting a 5.2% gain and increasing its market capitalization by $33 billion. Defense and reshoring-related shares were the standout performers. A bullish continuation pattern formed on the daily chart, reinforcing the sector's positive trajectory. Energy stocks showed resilience, outperforming defensive sectors with a 4.3% increase in a market capitalization change of $29 billion. Stable oil prices provided a solid foundation for the sector's performance. A bullish harami pattern emerged on the 4-hour chart, suggesting a potential end to the previous downtrend. This pattern consists of a large bearish candle, followed by a smaller bullish candle that's completely contained within the body of the previous candle. It indicates a pause in the downtrend and could signal a reversal if confirmed by subsequent bullish price action. The healthcare sector experienced a moderate rebound, with a 3.9% increase translating to a market capitalization change of $26 billion. Value opportunities were particularly evident in medtech and device stocks. A bullish piercing line pattern formed on the daily chart, indicating a potential trend reversal. This two-candle pattern occurs when a bearish candle is followed by a bullish candle that closes above the midpoint of the previous candle's body. It suggests that buying pressure is beginning to overcome selling pressure. Basic materials saw mixed performance with a narrow gain of 2.8% and a market capitalization increase of $19 billion. Copper and gold stocks fluctuated throughout the week. A bullish dragonfly doji appeared on the 4-hour chart, hinting at a possible trend reversal. This candlestick has a long lower shadow and little to no upper shadow or real body. Real estate lagged behind the general market rally, posting a modest gain of 1.5% and adding $10 billion in market capitalization. However, the sector's undervaluation could spark a rebound in the near future. A bullish hammer pattern formed on the daily chart, suggesting a potential trend reversal. This pattern is characterized by a small body at the top of the candle with a long lower wick, indicating that sellers pushed the price down during the session, but strong buying pressure brought it back up by the close. Utilities brought up the rear, declining 0.8% and shedding $5 billion in market capitalization. The sector's overvaluation continued to weigh on performance. A bearish shooting star pattern emerged on the daily chart, signaling a potential trend reversal. This pattern is characterized by a small body at the bottom of the candle with a long upper wick, suggesting that buyers pushed the price up during the session, but strong selling pressure brought it back down by the close. It's often seen as a bearish reversal signal, especially when it appears at the top of an uptrend. Looking at the broader market, bullish engulfing patterns were most prevalent in the technology, communication services, and industrial sectors, aligning with their strong performances. These patterns were most frequently observed on daily and 4-hour charts, indicating sustained bullish sentiment over longer timeframes. Conversely, bearish doji and shooting star formations dominated the utilities and consumer defensive sectors, signaling potential reversals in these overvalued lagging industries. From a valuation perspective, communication services stands out as the most undervalued sector, trading at a 7% discount to fair value. Alphabet, despite its $3 trillion market cap, remains notably undervalued at 10% below fair value. Real estate also presents attractive opportunities after lagging the general rally. While select healthcare subsectors, particularly medtech and consumables, offer compelling value propositions. On the other hand, utilities are widely regarded as overvalued, with most stocks trading above their historical means. As we wrap up this week's sector review, it's clear that market breadth continues to broaden. With bullish candlestick structures setting the tone for upward momentum in growth-focused and rate-sensitive sectors, utilities and defensive stocks may face headwinds due to persistent overvaluation. While real estate and certain healthcare segments offer attractive entry points for value-driven investors. In conclusion, this week's market snapshot highlights actionable opportunities tied to the most recurrent candlestick patterns, and identifies the sectors where bullish or bearish technical signals are most pronounced. Daily and 4-hour charts have provided the most actionable readings, offering valuable insights for traders and investors alike. As always, stay vigilant. Keep an eye on these key technical indicators, and position yourself to capitalize on the market's next big move. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.